Last time we talked about different type of loans, and you can pay as low as 3% for your down payment and criteria of getting those type of loans. But if you don't aware of what to do, what not to do during the process of applying a loan, even if you did get approved or even you have a commitment letter issued, you may still running into big problem or maybe get your loan denied. I had an experience a couple years ago that I took a mortgage for my condo that I bought in Manhattan. A week before closing, that was like 3 to 4 months in the process. I already got a commitment letter from the bank, meaning everything was good to go, was good to close. And I opened a store credit card. Next day, I got a call from my loan officer. My loan had a problem. So in this video, we're gonna talk about the process and what to do and what not to do during the process of applying a loan, and some advice from loan officer Michael Goldberg. Like what normally people ask?
I think people just don't know where to get started.
Right.
Right.
So
I think people don't know where to get started. And I think just reaching out to me and setting up a consultation is the best way to go about it.
Is that free?
Yeah. There's no charge. We're gonna go in depth and we're going to figure out what you're pre-approved for. In general, to make a long story short, the first process.
I want a long story.
The first process is obviously getting pre-approved, right? Before you submit any offers and before you sign any contracts, you want to make sure that a loan officer has reviewed all your paperwork to make sure that you're pre-approved for the correct amount. It's really more about where your comfort zone is than really how much you're pre-approved for, right? Just because I can lend you $1 million doesn't mean you want to take that type of loan, right? So it has to fit your monthly budget and has to fit your comfort zone. So knowing that you can, maintain a certain lifestyle and live a normal life instead of being strapped every month trying to pay your mortgage.
I have a lot of buyers ask me that, hey, how much down payment I should pay? I said that's not the question agent can answer.
Correct.
Nor the homeowner, right? That's the question they should ask you.
Sure. So there's down payment requirements, and then there's what should I use for a down payment. Those are very different questions. And in my opinion, it's finding a balance of borrowing the right amount of money, right, or borrowing too much money. Because if you don't use enough, your mortgage payment may be too high for your monthly comfort zone, right? But if you use all of your money, then you really put yourself in a position where you have no money for a rainy day. If God forbid something happens where you need an emergency fund, if you used all your money for a down payment and your closing costs, now you're in a real bind. You have a real problem. So I think it's finding that balance is the most important thing. And everyone's situation is different, right? Everyone has different responsibilities, different income, different savings. So it's my job to help educate them and help them come to an idea of where that right number is.
So before they're looking for a property, they should get a pre-approved.
For sure, that's definitely the first step.
So what do they need to provide to get a pre-approved?
So you need your income documents, the W-2s, the pay stubs, the tax returns, the stuff we went over before. We're going to need a credit report and your assets, your bank statements, your 401k, retirement, anything like that to show that you have the money for the down payment and closing cost.
Then after they get a offer, get accepted, now there's a processing to the loan.
Sure. So after you get an accepted offer, you negotiate the price and the terms of the contract, and you have a fully executed contract. That's when you can make an application to the bank. So the first step is disclosures, in which the borrower will review and then ultimately sign. And then after that, it goes into processing, where verifications will be ordered, certain paperwork will be requested, and then ultimately it will go into underwriting. Now, underwriting is where a decision is made by an underwriter to issue a commitment or not.
Before that, does the bank need to do appraisal?
Yes.
Okay.
Yes.
So what if the appraisal comes back that lower than the purchase price?
So yeah, it does happen. You know, you hope it doesn't. You hope that the house is priced correctly and that it's in line with what the recent sales are. But you know, it does happen where the sales price comes in for lower than the contract price. At that point, there's a few different options. You can always go back to the seller if you're the buyer and the buyer's attorney and agent. You can always go back to the seller side and negotiate. And if they'll bring the price down, then you know that could happen. As a buyer, you are entitled to pay the difference out of your own pocket, and then sometimes it's a negotiation and a meet in the middle type of situation where the seller comes down a little bit and the buyer comes up a little higher. But the important thing to know is that the bank is going to lend you based on the lower of the two. So if the house is in contract for $1 million, right? But the bank assesses it at 900. They're going to base their lending on 900.
Gotcha.
Right? So if you were applying for 20% down, you're now applying for 20% down of 900, not $1 million. And now it's on you to either come up with the difference or have the seller come down in price. Sure, as many as you like.
And then I forgot. Hey, is that mine?
Not mine.
So after you get a contract signed, then submit the application, then the bank send appraiser to appraise the house. When the price, everything is back to the bank, then the process comes in. Processing.
That's going on at the same time. Processing and the appraisal, we don't wait for one. They're happening simultaneously. And then ultimately, once you have all that together, it goes to an underwriter.
Then goes to the underwriter.
Correct.
And how long does it take from applying the loan to actually get the loan?
I mean, typically turn times these days in New York, you're probably looking at to get a commitment, probably within a couple weeks, right? To close, the normal turn times have been 45 days, about, and obviously that assumes that everything else goes smoothly. Of course, there's a lot of other things that can delay your closing.
Experience when I take a loan, right? Is everything is done. Everything is I get approved. Everything is done. We're always at the closing line, and like a week before closing, right? It's a holiday, so I open the credit card. Macy, the credit card is a Macy credit. It's not even credit card. It's a Macy, that store credit card. Yes. Next day I got a call. Okay, you got a problem. So what you advise people now? What not to do?
Yeah, there's a lot of do and don'ts, but some of the do nots. Absolutely do not is during the application do not apply for any new credit, whether it be credit cards, student loan, car loans,
even
store cards. Just don't do anything while you're applying for the mortgage, because it really could affect your approval and your ability to close.
Which means before the closing, the bank is gonna check all over you.
The bank will do a check before closing as well.
Right.
Yeah.
And I also had a client did wiring from China. Yeah. And then the loan got denied.
Another big do not is and do not make any large deposits.
Oh, not even deposit.
Just unless it's sourceable money where you can clearly see where it came from, like your payroll system, like your salary, that's fine. But large deposits in general, especially cash, are unacceptable. So do not do any of that during the process. No new credit, no large deposits. Those are two big no-nos. Those are two big no-nos during the process for sure.
What else you can think of?
I would say don't change jobs if possible, right? I would say
don't change job.
In the middle of your application.
Job, that they can provide the
That's fine. I'm not saying it's a complete no, but if you can avoid it, don't quit your job in the middle of you'd be surprised. Consistent employment is always is a good thing while your application is in process. I would say don't make any large expenditures.
Okay.
Right, during the process. Make sure you pay all your payments on time, all your bills on time. You don't want any, you want to keep your credit, you want to keep your credit in order. No large deposits, and just keep everything as you were before, nothing out of the ordinary.
So if you are applying a loan, just remember, no new credit card, no large deposit, maintain your credit score, and try not to quit your job if possible. So if you are shopping for a loan, in the next video, we're going to talk about different type of lenders, as well as 15 years versus 30 years, and some of the questions of if you should refinance. So see you next video.